Alex Pardo bringing the heat in here. From wholesaling to storage success, he's sharing secrets on the mindset that wins, the buy box that defines his deals, and the transferable skills that made it stick. This conversation is loaded. Storage over multifamily, creative financing, and market-crushing action. Get ready for a fast, fierce dive into grit and growth. Hey, it's V. Lee, and you are watching the Real Estate Baller Show. We a growing channel, building organically, and we need your help. Could you hit that subscribe button and share this episode with a friend? It means more to us than you know, and help us share more real estate investing tips and tricks with more people. Thanks and enjoy the episode. I'm sorry for this interruption. I've been asked a lot about passive investment, and I understand that there is nothing passive about being a landlord unless you can find a great property management company. So if you own an Airbnb, a vacation rental, or a short-term rental, and you are looking to free up your time, contact our team at Buzz Vacation Rentals at 281-549-8432, or check out our website at www.buzzvacationrentals.com. Thank you, and back to the Real Estate Baller Show. This episode is brought to you by Jet Lending. For over 20 years, Jet Lending has been helping real estate investors succeed. They offer 100% financing so you can be in at $0 at closing. I can always count on Jet Lending to fund my deals. If you're looking to fund your next deal, contact our friend over at jetlending.com. This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443. All right, we got a superstar here. Well, actually, he's been a star for a long time on the show. Welcome, Alex. Okay, let me correct me if I say your last name wrong here. Pardo?
You got it. You nailed it.
I got it. All right.
It's great to be here with you. I'm looking forward to the conversation.
Hey, Alex, where are you located?
I'm in Miami, born and raised in Miami, Florida. My parents, if you detect an accent, my parents are Cuban. My sister and I were born here in Miami.
Did they swim over?
No, they did. No, fortunately, they won the lottery in the 60s and they were able to hop on a flight. But yeah, no, it is pretty crazy though. That's a different conversation for another day. But no, fortunately, they did not defect. They were here. They're here legally.
That's amazing. Well, thanks for being on today. I think you've been on several podcasts as I was doing my research about you and get to know you a little bit better. Have you ever been interviewed by a Texan before?
In fact, yes, I have. A gentleman by the name of Mike Hambright recently had me on his show, and he's outside of Dallas, the Dallas-Fort Worth area. So yeah, but have I ever been interviewed by a female Texan? I don't think so.
Okay, well, Hambright is a good friend. He got a good program there in Texas. All right, so since everything is big in Texas, all right? So let's start with a big question.
Let's do it.
Okay, you ready?
I'm ready.
How many storage units do you own today?
That's a great question. So I have 186 units in Amelia Island, Florida. And then I am part owner in another facility in Canton, Ohio, which did an expansion a couple years ago. I should know how many units, but probably somewhere between 200 and 250 units in that facility. And then I'm under contract with a coaching client to buy another facility in Illinois. So had you asked me that question, V, about 6 months ago, it would have been just under 1,000 units. So 838 units. But that was a big undertaking. I ended up selling about 80,000 square feet of storage in Mississippi. And so now have experienced the full cycle of not just buying storage, operating it, but then also exiting and selling it.
Okay. All right. So you've been growing since, say, if you starting from scratch today, okay, what are the ingredients that you think you need to buy your first storage?
Honestly, whether my answer would be the same if you asked me that question for any asset class and really for any business. I think the first and foremost, I think anytime I go into a venture or anytime I'm looking to accomplish anything in my personal life, in my spiritual life, in my marriage, parenting, whatever it is, it's about having the right mindset. And I realize that sounds like a very cliche answer, but nothing great is accomplished, in my opinion, without first deciding and committing to that thing that you're looking to accomplish. So to answer your question directly, storage is no different. Sometimes I feel that people that are interested in storage because of the cash flow and all the other reasons that we may end up talking about on this episode, they tend to make it bigger than what it is. Sometimes I have conversations with people that are intimidated by the size, or they feel they need to have millions of dollars to buy these assets. And I think that belief, that limiting belief, that mindset stops a lot of people. There was a quote that I heard years ago, V, I don't know if you've heard it, but it said, where dreams go to die is in a cemetery. And I never quite heard that. And when I thought about it, like, why do they say most of the dreams are in a cemetery? Is because people don't decide, commit, and then follow through with some type of action. So that would be my answer. It's first just making sure that the real estate between your ears is right. And then you decide, commit, and you just figure things out along the way. I think oftentimes too many people feel they need to have all the answers before they take the first step, and they have that equation reversed. I think first you need to take the steps, and then you're going to learn along the way.
So you like me, like I study, but I take the step, and then I find out I did it wrong, and then I go back and I fix it.
That's it. Look, my mindset in most cases is that unless it's going to kill you, you're going to learn from it. So anytime I pursue anything, I'm either going to win or I'm going to learn. Now, don't get me wrong. Even though my attitude to most things is ready, fire, then aim, I do think there's a time to be prudent and make sure that you have the right advisors around you. Some people refer to them as coaches, mentors. You're in the right community and ecosystem of people that are further along in the process than you, because that counsel and the advisors that you surround yourself with can really help you avoid a lot of pain and a lot of mistakes. With that said, I do think you need to, whenever you set out to accomplish anything, I think the universe is going to test you, and you're going to be met with resistance, and you're going to have challenges. And it's those people that are willing to endure those things, learn, iterate, and then keep moving forward that I think ultimately end up succeeding, whether it's storage or anything else for that matter.
Well, you said you have over 1,000 today?
I had just under 1,000 units about 5-6 months ago. Okay. I ended up selling about 2/3 of my portfolio. And then right now we're always under contract or looking at opportunities to go under contract on when it comes to self-storage. But really, it's interesting. I've been hosting a podcast it's going on 9 years in a couple of months, called The Flip Empire Show, which I'm in the process.
Got a good name to it.
Well, I'm glad you brought up the name. So it's called The Flip Empire Show, but the irony is that was my goal and aim when I was in the residential business, is to build this massive empire and this big portfolio of real estate. And when I got into storage, I ultimately ended up learning in my journey that bigger isn't always better, right? Better is better. And so if you were to compare my mindset and approach in storage versus when I was in single family, I am no longer looking to build this massive empire of storage units. I look for 2 to 3 really good, solid deals. And I think one of the great things about commercial real estate and storage, which happens to be my favorite asset within commercial, is that it doesn't take that many good deals for it to have a very significant impact on your life and your financial situation. So yeah, that word empire, early on in my journey, I was all about bigger is better and scale and empire. And the older I've gotten and the more clear I've become on my vision and my direction, the path I think God wants me to go in. It's not that I don't I don't want to go big. I think big. I've realized that it's not all about quantity, but when it comes to assets, it's about quality.
It's so funny that you said that. We're going to off track here for a minute and talk about that mindset and that realizations of growth, right? Because I think like we all started being the entrepreneur, the visionary, because most business owner, that's what we are, right? We jump in and we have this vision of like massive, big and huge and do 1,000 deals and, you know, all kinds of stuff. And then if we get into it, we realize, oh my God, I don't want that.
That's exactly right. Well, that's what happened with me. I remember in end of 2017, I joined a high-level mastermind community that was made up of some of the top real estate investors in the country. And I remember going into that mastermind and seeing that people had hired a bunch of people and they were scaling the business and they were growing. And I remember, you know, looking at people and saying, well, if they can do it, I can certainly do it. So for the next 2 years, I set out. You know, I got an office and I started hiring a bunch of people and my overhead increased significantly. And I remember 2 years into the journey, V, I was like, this is not what I want. This is not like, this doesn't align with the vision of why I got into real estate. I got into real estate because I ultimately, it's not about the money. It's what the money can do for you. So really what it boils down to when I have conversations with entrepreneurs and real estate investors, and tell me if you've heard different, but I think freedom is the word that comes up a lot. You know, freedom to do the things that are important to us, and wholesaling, the transactional business of wholesaling just wasn't doing it for me. It was a great business to generate a bunch of cash. The mistake that I made early on in my journey is that I wasn't taking that active earned income and I wasn't putting it into cash flow producing assets. And so that's one mistake I made early on. Sometimes people ask me, hey, what's your biggest regret? I would have continued to wholesale, but I would have kept like the right properties.
So wholesaling, you touch on so many points here, but I think let's talk on something that's really important because I feel that when people want to scale, when you get in, you start small and then you start wanting to scale. And when you get scale, like you said, you realize your overhead got bigger, but not necessarily profit.
Right.
Right?
That's exactly right. No, I'm glad you brought that up because when you take on more, what happens oftentimes is your profit margins will shrink. And I remember, V, I was very humbled in 2019. So at the end of 2019, I looked at my profit and loss statement, right? And while our top line revenue was significantly higher than when I first got into the business, which was in 2006. You would expect it to be, it should be. My profit margin, I actually made a little bit more money as a solo operator in 2006. A year into the business, I netted more money than I did in 2019 after having, you know, over a decade of experience, having team members. And I just had the realization that this model is broken the way that I am building it. So how crazy is that? I made more money my first year in business as a net than I did, 13 years later or whatever it was.
Thank you for bringing that up. And thank you for admitting it to the audience, because I think that's huge. That's brave.
I'm going to shoot you straight. And I think that's one of the beautiful things about just being able to hop on a podcast or a YouTube channel. I'm drawn more to people that I think are just real and authentic. And, sometimes you hear people and they make it sound like everything is, they figured it all out and they're always making money and there's no challenges. And that's just not the case. And I heard years ago that it's not about gross, it's about the net, right? It's too many people focus on the top line revenue, but at the end of the day, what are you keeping? That's what really matters. Totally agree.
Okay, so you obviously transitioned from the wholesaling model into the storage.
I did. So I made that transition.
What year was that?
At the end of 2020. So I decided at the end of 2019, I'm gonna shut down the wholesaling business. What I didn't know is how quickly it was going to happen. So when COVID came, March of 2020, it was a blessing in so many ways, V, because it gave me a reason to accelerate the process. My plan heading into 2020 was, because at that time, I think I had a team of 8 or 9 people. My biggest concern wasn't for me, it was for my team. I didn't want to just shut off the business, even though I knew it no longer aligned with the vision. So my plan was to operate the business for the year and then create a safe landing zone for everybody on my team. And when COVID came, I really looked at it and I'm like, rather than completely change the way that we do business, because we were meeting belly to belly, face to face with sellers. And when COVID came, you had social distancing and things started to shut down. And fortunately, I had created a plan for certain team members. And so that transition was actually a lot smoother and easier than I anticipated. And by June of 2020, I had completely shut down a profitable wholesaling operation. And I remember my coach, who's still my coach to this day, he said, Alex, I know you. Before you go out to want to conquer the next mountain, in other words, get involved in the next business, he said, take some time off. Take some time off to reflect. Take some time off to journal, to think, spend more time with family. He said, you will know when the right time to jump back in. And I remember at the end of 2020 is after doing a lot of homework and research on the different commercial asset classes, I said, storage is for me. This is the asset class that I'm going to plant my flag on.
So what was going on in your head at the time? Like, why storage? Why not multifamily? Because that's the same time a lot of people jump into multifamily, right?
Right. Well, that was a factor. That wasn't the main, it wasn't the first or second reason I didn't. It's interesting you said multifamily. I think real estate investors most people start in residential. And then the natural progression is you transition into multifamily. But I had started building a single family rental portfolio in 2018, thinking that was going to be my path to freedom. And what I realized is that whenever you have tenants, so whenever you have toilets, that comes with certain challenges and certain issues. And the first thing that drew me to storage was that you don't have tenants, you have customers who are month to month, and you don't have toilets. And I don't know about you, but even though I've done a lot of fix and flip projects and rehabs throughout the years, I'm not very good at it. I don't enjoy it. So, in my rental portfolio, if a tenant would leave, we'd have to make it over and manage that whole process from afar. I was building this portfolio in Cleveland, Ohio. Like I said, I live in Miami. And I started to look at storage and I was like, okay, I'm very interested by the fact that you don't have tenants and toilets. And then as I started to really look into the asset class, I started to come across a lot of statistics that showed the data, which was storage has one of the lowest default rates in commercial real estate. And as I started to dig into that, it's because the operating expenses are lower than you would in a multifamily asset class, right? And you can correct me if I'm wrong, but multifamily operating expenses are probably 45 to 50%, and maybe in some cases a little bit higher. In storage, you're somewhere between 30 and 40% operating expense ratio. But ultimately, what really drew me to storage was the fact that because of technology, we can now run these facilities from anywhere in the world remotely, and I don't have to have any employees. In fact, when I had the portfolio about 6 months ago of about 838 units, I didn't have any employees. We ran what was called an unmanned model, which means that we didn't have to have an employee in the office. So those are some of the reasons that attracted me to storage. But really, I've been a customer of storage and it's a very sticky product. What I mean by that, V, is that when somebody rents a storage unit, they tend to stay for a long time.
Tell me about it.
Yeah. So, okay. So are you a customer of storage? Like, do you have your stuff in a facility?
I do, because last year I decided to go travel the world with my mom and my daughter.
Amazing.
And so I put stuff in the storage and I was thinking I'll get them out when I'm back. But you know what? It's the thing, out of sight, out of mind. So every time I look at my credit card statement, that's when I'm reminded that I need to go clear it out.
Yeah. Well, and so think about the pain of disconnect. So if you wanted to move your stuff, and I don't know how big of a unit you have, 10 by 10, 10 by 20, but think about what you would have to do and coordinate in order to get your stuff out. You probably have to take a weekend. You have to hire a moving company or at least get a U-Haul truck. I mean, it's a process to move your stuff out. And then think about what renting a storage unit costs. Depending on where in the country, you're going to pay probably anywhere from $50 to $350. And it's what's considered a nuisance expense. In other words, for many people, paying $100, $150 a month is not going to really, really hurt them. And so they just keep paying it. And as a storage owner operator, we really appreciate that because not only does it provide consistent, predictable cash flow, but we get to do something in storage called forced appreciation, right? The value of these assets is not determined by the comparable sales, by what another storage facility sold across the street. It's based on the net operating income, right? We have revenue minus expenses gives you your NOI, your net operating income. And so when we do rent raises and when we introduce different fee income and that increases our revenue, it's having an exponential increase on the value of the facility. And so that's what I mean by forced appreciation.
Okay. So something that we have some of the challenges that we face today in holding rental, like insurance and property taxes. I'm assuming the tax issue is the same for storage. Are you guys facing challenges with insurance, rising costs of insurance?
For sure. Especially on the coastal markets. Like Florida used to be, because I live in Florida and I own a facility in Florida, I used to focus a lot on this particular state, but because it's, Florida obviously can be affected by hurricanes, insurance premiums have gone through the roof. And insurance is one of those line items that I think storage operators or want to be storage operators, they don't pay enough attention to what the increase is going to be. So yeah, insurance is a real challenge. I mean, I have friends that have chosen to self-insure because when they factor in that line item and they look at the annual premium, it kills the cash flow in many cases. So
but you can only do that if you own it outright. If you have a lender,
or if you do seller financing and the seller doesn't require it. But to your point, if you go get bank financing, you have to put insurance on that facility.
Right.
And that's one of the things that I wish I knew 5 years ago when I got involved in storage, is that a lot of the skill sets that I acquired as a single family investor have translated over into storage. So we have bought storage facilities on creative financing. We've bought storage facilities with small business administration loans, SBA. So there are a lot of different ways to buy and get involved in these assets. And the interesting thing in my case, V, is that I did that without using or leveraging any of my own money. It was all other people's money, whether it was the bank, the seller, private lenders, equity partners. I mean, there's a lot of different ways to structure these deals.
How do you feel? Because are they simpler? Are they complicated? To structure these type of deals, what kind of knowledge does an individual need to have to be able to, get creative financing? Because I think that's one of the big concerns for anyone who looking to get into storage is, well, how do I get funding, right?
Yeah.
20% down of a storage unit is a lot more than 20% down on a house.
Exactly, 100%. And that is the number one limiting belief that I find. I mean, you hit the nail on the head, is the one thing that prevents people from getting involved in this asset class is them not having the 20% or the 25 or the 30% down if they were going to go get traditional bank financing. So it's just understanding that there's a knowledge gap. You have to understand how seller financing, creative financing, deal structuring, it's learning some of those skills. Before you get there, it's just borrowing the belief that you can do these deals without having money. I know because I'm living proof. I have a coaching client right now who should be closing on her first storage facility in about 3 weeks, that she is getting into her first deal without using any of her own money. She needed, I think it was 30%. She needed 30% to get into the deal, and she got that from 2 equity partners. So she gave up some ownership in the deal. She got the 30% she needed, and she's getting bank financing of 70%. So it's just a knowledge gap. It's just understanding that you can do these deals. It's not that you don't need money. It's just the belief that it doesn't have to be your money. And so I'm a big advocate of seller financing. And really, seller financing is nothing more than just, sometimes you have to educate the sellers, or, if there's residential investors watching, the homeowners. It's basically just them becoming the bank. I think a bridge to get to that conversation is to ask important questions to the seller of like, hey, once you sell this property or this facility, if you don't mind me asking, like, what are your plans for the money, right? Are you getting ready to travel the world like my friend V here did last year? Are you what do you plan on doing? And then I will ask questions about, well, listen, obviously I'm not a CPA or an accountant, but have you had a conversation with your CPA about the potential tax consequences of selling? Sometimes just asking those questions will reveal a lot about where the seller's mentality is, and that can open a door to have a conversation about seller financing.
So it's simple as start by asking. Just start asking.
That's
never
it.
know.
That is to me, asking questions is your best tool. It's the best tool of a coach. It's the best tool of a salesperson. It's really just asking questions to understand the position that person is in, what their plans are, and then structuring the deal in a way that helps them accomplish what it is that they want.
So I think you did answer this one question that I have earlier. Your units are local and long distance.
All of mine are long distance. So I live in Miami, and I don't own any storage facilities. I could not hop in a car and get to my units without it taking, probably over 6 or 7 hours. And that's good, because if it was in my backyard, I would probably be there more often than I need to be. And so the facility, like I'll give you an example, the facility I own in Amelia Island, I've owned that facility for almost 3 years, and I've been there 3 times. Once during due diligence, the second time was when we closed, and then I went one time about a year and a few months ago. So you don't have to be there very often.
So tell us about that. So you don't have to be there.
Right.
How do you manage it from afar? How do you have maintenance? Do you have issues? How do people sign up?
So one of the things that I coach my clients through is a 3-prong management system. And the first arm or leg of that system is we work with a third-party management company that is reputable. They specialize in storage operations and management. And the reason I was able to work with a third-party manager for all of my facilities is because when I got into storage, I had the belief that it's just as much work, time, and energy to look at a small deal as it is to look at a big deal. It really is no different. And so I started looking for storage facilities that were 20,000 net rentable square feet and greater, because I knew that in most cases, those facilities would generate enough revenue to be able to support a third-party management company. So I have a third-party management company that is responsible for the operations. Now, it is my responsibility as the owner to manage the manager always. You never want to just turn the blind eye and assume that they're doing what they need to do. I have a part-time 1099 independent contractor, boots on the ground. That person is responsible for once a week going to the facility and doing unit sweep cleanouts, lock audits. They put overlocks whenever a tenant is behind. They keep the facility clean. They take pictures whenever we're going to auction the contents of a unit. So that person is part-time. Again, they visit the facility once, maybe twice a week. And then our third-party management company has a call center. So I have never spoken to one of our customers. Whenever they have, if there's an issue or if they ever want to rent a unit, everything is digitally. So they can scan a QR code and immediately rent a unit. They can also call the call center, and the call center, takes care of them. That is what provides us time freedom, is the fact that I don't have to be there. I don't have to have any employees. Automation does a lot of the heavy lifting, and then working with a really, really good boots on the ground and third-party management company that has a call center. That is the 3-prong management system that allows us to operate these facilities from really anywhere in the world and not have to be there very often.
What do these management companies typically charge?
Yeah, it's a good question. Typically anywhere between like 5% on the low end to 10% on the high end. Sometimes it's just a flat fee. Like in my particular case, I just pay a flat monthly fee. So I believe I pay $1,500 in our Florida facility, $1,500 a month. And that's baked into our operating expenses. So yeah, but in many cases, 5 to 7%, 5 to 8% is not uncommon.
Okay.
Yeah. And that, by the way, that's a percentage of gross. That's a percentage of
gross rent, right?
The gross rent, correct.
Yeah. Okay. So that leads me to the next questions. How do you underwrite your deal?
That's a great question. It's a loaded one. The first thing that I do is I have a back of the napkin analysis that I do. I think a mistake that people make when they look at storage is that they'll look at an operating memorandum, what's referred to as an OM, which is basically a a listed facility, and then you have a PDF of 10, 15, 20 pages, and people will spend hours and hours looking at these numbers trying to make sense of them. The first thing I look at is just, what is the current revenue? I'm going to factor in what I believe my expense ratio is going to be, whether that's 35 or 40%. I'll come up with the NOI. And then the first thing I like to do is compare, okay, here is the revenue. Here's what I believe the net operating income would be. What could it be based on the average street rates within a 5-mile radius? So in other words, similar to residential, how we look at comparable sales, I will look at comparable rents within a 5-mile radius. So as an example, V, let's say we're looking at a facility in Texas, and a 10 by 10 goes for $70 a month. But I look at all your competitors within a 5-mile radius, because in storage, we want to look within a 5 to 7-mile radius. And I see that the average of your competitors, of apples to apples, they're at $100 a month. Well, I already know that there's a pretty big gap there, that if I was to buy this facility, I could probably go in and raise the rates significantly from 70 to 100. Now, of course, I would look at all the other units. I'm just picking a 10 by 10 as an example. So what I'd like to do is compare the current revenue relative to what the revenue could be once I implemented rent raises, once I implemented my marketing systems. That is what I consider a light value add. And then I look at the equity upside. In other words, if I was to sell this facility in 3 years, and I would factor in a capitalization rate of, like, let's say 8%, what would the value be? And so I look at the delta, right, between what am I buying it for and what do I think it's worth relative to what it could be worth once I raise the rates, once I implement certain income streams like late fees, auction fees, admin fees. There's a lot of profit centers in storage that can help increase the revenue and the overall value of the facility. And then I'll just factor on, like, okay, if I'm going to get bank financing, what is my debt service going to look like and how much cash flow would this facility provide? And then it's a matter of just structuring the deal in a way that it makes sense to hit your specific goals, whether that's a cash on cash return, right? How much money are you putting into the deal relative to how much money that facility or that asset is going to provide you on an annual basis? So that is, sometimes it's hard to explain how to underwrite a facility without, like, whiteboarding it, but big picture, that's kind of how I look at underwriting. It's just, what is the value today? What could it be? And where is the opportunity? So simply put, obviously you look at all your costs, what you could get for it, and see if you make money. Yeah. And is the juice worth the squeeze? In other words, just because a facility makes money, it doesn't necessarily mean that's the facility for you. You have to ultimately determine, if you're going to buy this asset and you're going to manage it and operate it, is it worth the X amount of dollars that you believe you're going to make once you sell the facility or refinance the facility? I look at deals on a monthly basis that it could make some money, and it maybe was a deal that I would do early on in my journey, but today, based on certain goals and metrics I have, it's probably not worth it. Okay. You said you have a third-party management company. Do they also manage your revenue, meaning your rates? And do they also manage the marketing to find customer, or is it something you have to be responsible for? So we handle marketing, not because they don't have a service that handles marketing. Marketing to me is the lifeblood of pretty much any business. You constantly need to have a steady stream of leads. I don't care what business we're talking about. And so that is something that we've taken on in-house. So we have a dedicated pay-per-click guy that handles our Google advertising campaigns. And the interesting thing with storage, V, is that marketing is pretty basic and simple. The majority of our customers come from online marketing. So you have to have a strong Google My Business presence with good reviews. And then we have a pay-per-click campaign. And then we do run offline marketing campaigns like signage. We partner with local businesses in the area. And so but the majority of our marketing comes from digital, from pay-per-click and from SEO, search engine optimization. So we choose to handle marketing in-house, but there are third-party management companies that can handle absolutely everything for you, from bookkeeping to revenue management to marketing. It really just depends on what level of service you're looking for.
Well, so with that said, how do you hold your own against the public storage, extra storage space of the world?
Yeah,
They
no,
got a lot more money, deeper pocket.
100%, absolutely. You know how we all hold our own? By not competing with them. That's the truth. So I like to look at, and this is a really good segue into something that's super important to discuss when it comes to anybody interested in investing in storage. The first thing you need to do is make sure that you are buying a storage facility in the right market. So what do I mean by the right market? That's a very vague term. I like to be in markets that are undersupplied when it comes to storage. In other words, simple economics 101. I want to be in a market that has more demand for storage than they have supply. Because you can be a really, really bad operator and get into a market that is undersupplied, and chances are you're going to do well. Why? Because there's a need for storage. There's demands. Now, if you were to flip that equation,
by default. Yeah.
Yeah, by default. Now, I'm not saying, obviously you want to be the best operator you can be, of course. But if we were to reverse that equation, and let's say you gave me a really, really strong operator, and you put him or her in a market that is totally oversupplied. I mean, storage is saturated, and there's not enough people in that 5 to 7 mile radius to occupy that storage. I don't care how good of an operator you're going to be, you're going to struggle to lease up and raise rates. So the first thing is the market. The second thing is I like to be in what's considered secondary or rural markets. And oftentimes public storage, Extra Space, CubeSmart, what's the REITs, the Real Estate Investment Trust, are the ones that own those big Class A facilities. They don't like to be in tiny or small markets. They want to be in big metropolitan cities like Miami, like Dallas, certain big cities in California, etc. So it's not to say that I wouldn't buy a storage facility that was competing against public storage. In fact, my very first storage facility in Mississippi, public storage was 4 miles down the road. I ended up buying it at a really, really good price, so it made sense. But it's very difficult, to compete against those big box Class A facilities because, to your point, they have a lot of money and they can offer promotions to customers in the area that you might not be able to offer. Like I've seen promotions where it's like, get in for $1, or like just super cheap, get in for $15, $20 on a 10 by 10. But the game that they play is 30 or 60 days later, they're going to increase your rent to market. So they get people in because they know that once they're in, they pretty much have them. And then they increase the rates on them. That is very
That's
common.
it. Yeah, that's what they do.
That's a very common strategy for these big Class A facilities.
Yeah. I was doing my research again on this, and I've always thought that public storage is the biggest, in this space. But on my research, I realized that extra space storage actually just became the largest, right?
Yeah. Extra Space is huge. Yeah. CubeSmart, Life Storage, Extra Space, Public Storage, KO Storage. There's several big operators out there. And one of the things I do is I teach coaching clients how to go to Google Maps. And this is free. Like anybody can learn to do this. Is you go to Google Maps and you type in whatever city and state you're interested in buying storage in. And then you click the nearby button and you type in self-storage. And then you're going to see a bunch of red dots. That's called the Google Map Pack. One of the very first things I look at is there a REIT in the market? In other words, is there a public storage? Is there an Extra Space? And if I see that, it's not a deal breaker, but those are not typically the markets that I like to operate in.
Okay. That's interesting.
Yeah.
I mean, yeah, those are the big elephant, right? The big guys.
It's funny that you said elephant, right? Because when I first got into storage, like I remember my mom, she's like, oh, so are you going to buy like that big orange, like, you're going to buy one of those public storages?
Yeah.
I'm like, Mom, that's not quite the storage facility that I'm going after. You got the right idea. That is a storage facility, but I'm looking for a little bit of a different type of storage facility. So yeah, mom and pop operated storage facilities in secondary and rural markets. Like I typically look at markets that have population from 1,000 people on the very, very low end to about 60 or 65, 70,000 people.
So you talk about market saturation. I mean, how do you figure out if the market is saturated?
Yeah, great question. So I'm going to give you a technical term and then I'm going to explain it very simply. There's something in storage called the square foot per capita. Square foot per capita. Another word for it is called supply index. Let me just break that down because that's industry jargon that people don't care about. All that means is how many square feet of storage is available in a 5-mile radius relative to the population in the 5-mile radius. So okay. That's all we're looking at. We're looking at how many square feet, and there's tools out there that can get you like really quickly the square foot per capita. The rule of
thumb, I bet ChatGPT probably can give you an answer on that.
Now, because this is so, it probably could, because it's so important, I would always trust, but verify.
Right.
I would always verify because you definitely want to be in a market. One thing I don't want to forget to mention that is so important. I've seen people get burned by this. Whenever you are looking at a market, make sure to check with the county, the building departments. Are there any open permits for additional storage coming into the market? The last thing you want to do is go buy a storage facility and then find out that right after you buy it, 2, 3, 4, 6 months later, you have 50,000 square feet of brand new storage opening up right across the street from you or 3 miles away, because that can really hurt. Again, now what is that doing? Now it's increasing the supply of storage, but the population hasn't really increased, at least not by a significant number. So I like to be in markets that are growing, right? You have people coming in, there's job growth, and that don't have enough storage. So super important that you look at, again, what's called the square foot per capita is how many square feet of storage do you have relative to the population? And you want that number to be as low as possible. The rule of thumb, they say, is you want to be under 7, but sometimes I think that is overstated. That is just one piece of the equation that you have to look at.
It's pretty cool. Well, that's going to lead me. I have a few more questions for you, but you have been so giving so far. Since you've given all your secret sauce out and you have a coaching program on storage, why would people want to join your coaching program if you already given out all your secret sauce? I
love that you asked me this question. I live in an abundant world. My belief from early on when I started working with coaches, and you can see I read a lot. I have a lot of books, and I truly believe that the best way to have an exceptional life is to give. I think Tony Robbins said, it's the people that give that really truly are fulfilled. And the cool thing is that by giving, I actually end up getting more, like more opportunities come. That's why I started a podcast 9 years ago. And I literally share everything I'm doing. First of all, I don't believe in secrets. Everything is out there. I didn't invent any of this stuff. I learned it. Have I made some tweaks and added my flavor to it and made some adjustments along the way? Sure. And do I have some frameworks that I really believe work? Absolutely. But I have learned in life, the more you give, the more you get. And it just feels good to be able to come on here and share, because unfortunately, V, most people that listen to this podcast or anything else are probably not going to implement it. It's the few that do that I think are going to see the results. And so I have been coaching real estate investors since 2012. And that is where I get a lot of joy and fulfillment when it comes to the real estate business. It might surprise you or people listening or watching us that I don't get fulfilled by doing another deal. I've done a lot of deals in my life, and don't get me wrong, I'm grateful for the opportunities and the money that comes with that. Where I get a lot of joy is seeing people that I've worked with succeed. And so, look, storage in many ways has changed my life. I think it's a much better asset class than I think oftentimes people spend so much time stuck in the rat race of residential. And so now I coach real estate investors and people that are stuck in jobs they don't like on how they can ultimately just generate more cash flow, build more wealth, and just experience more freedom through the asset of storage.
I go back and forth, right? I've been in single family for 9-10 years now. And sometimes I go back and forth, like, is it time to go do something else? And then I always come back to single family. Yeah.
Look, single family is great. Like, here's the thing. It's what you know, and it's your comfort zone. And you can do extremely well. You can achieve financial freedom through single family. Everything you can accomplish in storage can also be done in single family. In my experience, I just find that it takes more volume. It takes many more transactions than it does with storage. With storage, 1 to 5 really, really good deals can change your life. Whereas in single family, I don't know if you can say 1 to 5 single family deals can change your life. Maybe in some cases, for some people, depending on their situation, it can. But it's not that I don't like the single family asset class. I spent almost 15 years in that asset class. It's just that I didn't want to necessarily have to do more. I wanted to just do bigger deals and less of them without having to have a big team, big operations. And really single family, like again, in my experience, owning a portfolio and having a portfolio, I would earn $300 to $400 in cash flow, and then a furnace goes out, or I have to replace a roof, and then my cash flow is gone for the year. And so I think the dirty secret about building a rental portfolio, and this might be a controversial hot take, is that it's not about the cash flow. It's about, if you have those assets over time, it's about the appreciation and the equity buildup. But it's interesting, like you and I got connected because of a mutual friend of ours, Will Hull. And, I had the pleasure of working with Will for years, and, he was part of our mastermind. And the reason I bring up Will is because there's a lot of people that you and I know that have over 100 doors in their portfolio. I can't speak for you, but I've had one-on-one conversations with many of them who have been in the process of downsizing that portfolio and selling off a lot of those assets to then now take that equity, take that cash that was locked in those houses, and putting it into bigger asset classes like storage.
I think it's just a matter of wherever the individual is in their progress or path on this real estate journey, right?
I agree.
And one thing may make sense and another thing may make sense. But we go a long way to now circle back to your first storage deal. So how did you get it? And you still have it today?
That's one of the ones that I sold. I sold one in September and I sold one in October of last year, of 24. So it was, my very first deal came to me because I got very, very clear on my buy box, right? There's something I call the storage avatar, which essentially is, what type of markets are you interested in? What size facility? Are you looking for cash flow? Are you looking for equity upside? Maybe a combination. So I developed my buy box, and it was a bullet point, 1-page document. And I would literally, when I got into storage, one of the concepts I teach is being like a farmer, and you plant seeds with everybody. Let everybody in your network, your ecosystem know that you are looking for storage, and share with them your buy box. And because I was so clear and intentional about sharing with people, there was a friend of mine that I was working with that he ended up, I'll never forget, he sent me an email and he followed it up with a text. He said, "Hey, Alex, check your inbox. I think I found your first storage deal." This was in the beginning of 2021, right?
Yeah.
And I said, "How do you know you found my first deal?" He goes, "Well, you've been telling me for months exactly what you're looking for, and here it is." I said, "Perfect." So I ended up looking at the deal. I did something a little bit unconventional. I don't typically advise and coach my clients to go visit the facility before you have it under contract. This was a unique case. It was a pocket listing that he had access to through a broker. And a pocket listing just means that it wasn't listed on the open market.
Yeah.
And so he had built a relationship with this broker. The broker fed him the deal. It didn't quite work for him, so he gave me the first crack at it. But the broker insisted that we go see it first before they were willing to commit. I normally wouldn't have done that, but because of the relationship that he had built with the broker, I had a very strong indication that if I wanted it, it was going to be mine. So I ended up going to see it, and I bought that deal, I think 5 months later. So it took a long time to close it because I didn't have the money to buy it. So I bought that facility for just under 1.6 million, 1.592 was the purchase price. And I needed 15% to get into that deal because I was looking at getting a loan from SBA, the Small Business Administration. So I needed roughly 300 to 350 grand between the 15% down payment and money to put into the facility. I needed about 350 grand. And I ended up bringing on an equity partner somebody who I had built a relationship with, I've done business with throughout the years. He provided the $350,000 I needed. I went out and I got 85% financing from the Small Business Administration and was able to get involved in my first deal without having to use any of my money. And that facility we just sold in October for $2.495. So we got some cash flow for 3 years, learned a lot going through that experience and owning and managing and operating that deal. And we ended up, making out all right on the sale.
Well, I hope you didn't have to pay tax on all the capital gain there.
That is another conversation for a different day. I did not 1031, so yes, I will be paying the tax man on that one. There was some seller financing involved on that transaction as well, but yeah, it was a pretty big capital gains hit.
So I'm gonna circle back here. If I had a golden buzzer, I would buzz it when you said you gotta have your buy box. Whatever it is, I believe this, whatever it is that you want to buy, to single family, multifamily, commercial building, I think the key is, like you said, you got to focus and figure out what your buy box is so you know what to go after, right?
That's it. Not only do you gain peace by having that clarity, but there is something, I don't want to overstate this, but the word I was going to use was magical. And I realized that might sound a little bit up in the clouds to some people, but it's incredible the power that comes from getting crystal clear about something. And now all of a sudden you just focus on that. And some people might say it's God. Some people might say it's the universe. Some people might refer to it as the reticular activating system, right? Which is you go buy a new car and then a day later you start to see that car everywhere where you didn't see it before. Yeah. When you develop a buy box, you get peace, clarity, and there's so much focus and intentionality that comes, that my belief is that those opportunities, if you're taking action and if you're executing on the plan, you're going to start to see more of those opportunities come up. Versus what a lot of people do is, hey, I want to go find a storage facility, but they're very scattered. They don't have a plan. They don't have a market. They don't know what size. They're looking at everything. And so when you don't have a vision, everything looks like an opportunity.
Right. Awesome. Is your buy box still the same today, or has that changed since you started?
It's been modified, but it hasn't changed all that much. Look, my buy box when I first got started, as an example, I wanted to own a facility in Florida. I checked off that box, but you have to adapt and adjust in business. Storage is no different. We talked about why storage. Storage is an actual business. It just has the benefits of real estate. Well, because of insurance, Florida is not necessarily a market that I'm really targeting. It doesn't mean I won't buy a facility here. It just means that, I've tweaked and adjusted my buy box a little bit, but the core of it is pretty much still the same.
Amazing. Okay. So as we are wrapping up here, Alex, what advice would you, Alex, have for your 18-year-old Alex?
That is such a great question. It's a loaded one. I'm going to default is not the right word. I'm going to say something I think that is probably not what many people are expecting me to share. Faith has always been important to me. It's just more important to me today than it was when I was 18 years old. So for those listening, I would say get to know your creator. For me, that's God. Life is completely different when you have a relationship with God. Again, in my case, for you, it could be your creator, the universe. I respect everybody's, and this isn't a conversation about religion. That would just be my advice, is get as close to God as possible. Develop your faith, spirituality, start there, because to me, that is the foundation. The next thing I would do is read more than you watch TV. It's good data in, bad data out, right? So read, surround yourself, hire coaches and mentors, view those things as investments, not expenses. When I first started in real estate, I remember thinking to myself, why would somebody pay a local mentor $5,000 to learn how to wholesale real estate? Just figure it out. And then I got involved, and then 2 years later, I did my first fix and flip project and lost a bunch of money. And I'm like, that's why you hire a coach and a mentor, because they know what you don't. And so just invest in yourself. It is the best investment you could possibly make. And watching V's, listening to V's podcasts, surrounding yourself with people and choosing who you follow, that is a big investment of time. And so the way that I think you could repay us is speed of implementation. Take what you learn and go apply it in the real world. fail, learn, tweak it, iterate, do it again. That is how you grow. That is how you get better.
I'm going to echo you here. I totally agree. Information is abundance outside, but it's the people who take the information and act on it and do something about it. Those are the people that create things and make things happen. So, and thank you for the plug, for the compliments here, for people to go listen to the REBallers show.
By the way, I love the name. I love the name. It caught my attention when I first heard it. And no, look, I have a lot of respect for educators and content creators. I know the time and energy it takes to, it's not just devoting an hour to interview somebody, but everything else that comes with packaging that and putting it out there. And so I just have a lot of respect for people that are doing really good things out there and have a heart to want to serve and help people. And so, yeah, absolutely. I appreciate you having me on and for what you're doing.
All right. Well, last question, Alex. How does the audience get in touch with you?
Yeah, no, thank you. So a couple different ways. If you are interested in learning more about storage and our coaching program, storagewins.com, WINS, storagewins.com. The other way you could do is follow the podcast. So depending on when you might be hearing or listening to this, it's called the Flip Empire Show. I am in the process of rebranding that podcast to the Storage Wins podcast. But if you just go out there and search it on Apple Podcasts and Spotify, you will find it. You could probably just do a search by my name and it'll come up.
Hey, thanks for tuning in today. I do have a favor to ask. If you enjoyed this video, please don't forget to like, subscribe, and hit that notification bell to stay updated with more amazing stories and insights from REBallers. Thank you so much, and we'll see you in the next video.